Topic today for us is to discuss India's petrochemical opportunity, turning domestic strength into global leadership. A very quick introduction. My name is Sudeep Maheshwari. I'm a partner with Carney, a global management consulting firm. With me, we have Leon Bruyn, who's the president and CEO of Lummus, Mr. Shankar, who is the chairman and managing director for CPCL, Mr. Bhartan, who heads the director refinery for HPCL. Warm welcome to all of you. It's a very interesting period. I've been, tracking this petrochemical market for more than a decade, and we have been professing all our clients, especially the refinery, owners, to get into petrochemical, and we see a lot of activity. But what has really changed in the last couple of years is there's a significant overcapacity in the global market, and which is completely changing the dynamics of the petrochemical industry. So it's a very interesting period. I mean, on the one hand, there's a global overcapacity, rationalization that is happening. At the same time, if we look at India's demand, it's pretty robust. And so that's where I guess a lot of discussion will happen. Given this market situation, a dichotomy of sorts, how should India navigate? And should it be about self-sufficiency in petrochemicals from here, or is there really an opportunity for India to become a manufacturing leader? So that's the topic for today. What we will do is to start with, to my fellow panelists, I want your view on one question, and I'll want view from all of you. Short 1 minute, then we'll dive deep into some of the other questions. Okay, Leon, I'll start with you since you're next to me. From an India's point of view, where do you think, what is the single most biggest strategic shift, especially if we take a 2030, 2035 timeline, that India should really think about if we have to, be a powerhouse in petrochemicals?
So yesterday we heard in the opening speeches some consistent messaging. India is the fastest growing energy platform relative to any other country in the world. And that presents with opportunities and needs. And we have to make sure we support that with better, more reliable, more efficient and more profitable technologies to make the most out of the imported crude oil and gas that India consumes. More and better technologies that are deployed to convert these valuable streams into higher value products that are in higher and growing demand in India. And we have to figure out together how we can maximize this conversion in the most sustainable way and also in the most profitable way so that we create enough momentum to keep growing this way.
Thanks, Leon. Mr. Shankar, same question to you from your vantage point.
Yeah, from continuing with what my fellow panelists have told, I think the shift that is very important for us now at this point of time is to see that just as we are expanding our refining capacities, we are going global, and we are going to be a kind of global power center for the refining industry. I think we need to take a shift and move towards the petrochemical, also build capacities, try to diversify, build more petrochemical intensity index in the existing plants, and plan the new projects with the higher integration of petrochemicals and become a global hub for the capacities and the volumes with respect to the overall petrochemical demand that we are seeing rising daily. So I have a feeling that the major shift that should happen is in building more capacities in petrochemical plants.
Mr. Bhartan, your views?
Yeah, good evening. Good evening to the panelists and the select few audience who are there with us. About 5 years back, it was projected that India should have one cracker built every 5 years, and we thought we will make 7 to 8 crackers. We did commission one in Bathinda, another one in Barmer will get commissioned this year. Bina is getting constructed. Beyond that, what is the question? I think we should not lose the momentum. We should see means and ways of how do we sustain. This is where innovation in the form of feedstock and technology will come in. That is what we should concentrate.
Thank you, Mr. Bhartan. Just taking this discussion forward, and my next question is to you, Mr. Shankar. I mean, CPCL, you have been in middle of a project conceptualization. You have pivoted it from a fuel-centric refinery to now more towards petrochemicals. If you can talk about that, how that shift is helping economics, if at all, and how does it help in the India's overall petrochemical supply-demand gap?
Yeah. See, CPCL, if you remember that around 2017, we had the huge plans of going for a 9 million metric ton refinery at Nagapattinam, down south in Tamil Nadu. That we had done an entire study and we wanted to build it in two phases. The phase one involved building the fuel systems, and then the phase two was planned to go into the petrochemical sector. So that was a phase-wise integration in moving from the fuel side to the petrochemical side. But while we were doing the assessment of the financial returns, if you look at the IRR and other concepts, a fuel-based refinery on its own, it cannot be sustained on a financial terms, on an economic scale, of 9 million metric tons. So we had to relook at the whole thing because we thought if we are able to directly move into the phase two position of the project, instead of graduating phase-wise over a period of 5 to 7 years, we took a look at it. We went back into the drawing boards and we started working on the concept. And we saw that if we are able to move into a cracker area, like what Mr. Bardhan was saying, every 5 years you need a cracker. So what next? So we thought the next good idea would be having a cracker in Tamil Nadu, because Tamil Nadu is really doesn't have any cracker of its own. So we looked at various ideas of maybe looking at naphtha cracker or some other streams. But then finally we could look at a cost-based solution so that we don't build too much of capex into the project. So we worked it out, and then we have, you can say, done a stage one, you can say around 30-40% of the costing. If you say plus minus 40%, we found that ethane cracker would be a good proposal there, because the ecosystem is very good in the Nagapattinam region. We have a very good and running port out there and good rail and road connectivity. So considering the import requirement of the feedstocks and also the evacuation of the products, that area is very well suited to have a large cracker. And that is what the state of Tamil Nadu is also starving for. So we are trying to build a kind of a project proposal at this point of time, because land we have already acquired and we have a good parcel of land. So we are looking at the ethane cracker as one of the major projects that we can build in Nagapattinam. And we are also studying what are the economics, how we can build with the state government support, how we can move forward and put this in motion. So we can say that right now, although we have a plus minus 40 level of configuration available with us, also we are talking to the government of state government of Tamil Nadu for to see how this whole package can be incentivized. So that's where, and it really gives you a good returns also, because yesterday I was talking to some of the industry leaders. They say that a petrochemical intensity of around 35-40% is what we should look at as a minimum, and the IRR should not be in the range of 10-12 that we normally talk about. We have to look at something like 25-30. That is what the new rule is in the market. So looking at it from various perspectives, how to build the very efficient and very profitable model. That's what is the plan now.
25-30 is very ambitious.
Yeah.
I hope for the best.
I know, but that's what the market talks about, you know.
Leon, coming to you and your opening note, you mentioned, right, technologies, and you are seeing around the world as CEO of Lummus. Are we on the right path in India as far as technologies? What should we be thinking about, especially for next 5-10 years?
Yeah, so the breadth and the depth of the demand for advanced materials and energy products in India demands that we have to think beyond just the conventional process technologies. We have to start thinking of an integrative approach of all technologies, process technologies, digital technologies, better catalyst technologies, equipment technologies, and whatnot. And it's very encouraging when you look at the innovation state in India. The R&D by the government companies is phenomenal, and I know my gentleman on my left would agree with that. And so I look at the opportunity of combining all that innovation with an infrastructure and a partnership between private companies, public companies, and the government to make sure that the right policies are in place to allow an expansion of the hydrocarbon industry in a prudent manner. And then with the right investments. And of course, Mr. Shankar highlighted that there has to be the healthy return on investment, because these are investments for the long run, and these are massive investments. These are These require to deploy the best of the best and also have the return to support that. So when we look at Lummus Technologies' role, we want to support this energy transformation in addition, as Mr. Sultan Al-Jaber mentioned yesterday, to the best possible. I would say India doesn't just embrace the energy needs and the transition. India is leading and shaping the energy space, and it's a blessing for Lummus Technology to be a partner to many companies in India to do that.
Thank you, Leon. Mr. Burton, coming to you, and Badmir will soon come online. I mean, it's a very difficult market if we see, at least in our view, in next few years. There's a rationalization of capacity happening, both on refinery side and also on petrochemical. In such a scenario, I mean, what's your view? Where we should be? What operational capability? How should we be running our refinery and petrochemical to, really be economically viable?
Right. So we are definitely going to start in a period where the price is really low, and looking forward, we don't know, 2, 3, 4. It's anybody's guess when it will go up. But the blessing in disguise is this refinery is integrated in such a well-knitted manner with the refineries. Each and every stream is actually valorized properly, and molecular valorization will bring in lower cost of operation. That is one advantage. Definitely we have kept it in the design, and in actual also we must be able to do. The second blessing in disguise is actually the fuel cracks are quite good, and we are looking at fuels from this refinery also, though the petrochemical intensity index is as high as 26%, which is highest, going to be the first highest in India. It's ironical that fuel is going to subsidize petrochemicals in this initial days, and in the coming days we hope as the prices improve, we will be able to catch up and then go for the next expansion plan. Having said that, I feel we will have to add one more. We should not treat polyethylene and polypropylene like a simple commodity. We will have to add value to that, bring some engineering solution to that, which are the other main class of importing that is taking place today. Today, two major class of products are being imported. One is the plain vanilla commodity polyethylene, polypropylene. Second is the engineered product. We will have to look at the engineered product if you want to have more value.
So if I may add, so what Mr. Batalan just said is extremely important. Yes, there is overcapacity in certain products, but there's also a dire need for certain higher value products. And I think the capacity that has been built up in India had served a very important basic need, but we can go into more specific high value products where there is no overcapacity, and this way deal with the market situation in a profitable manner.
Got it. Very interesting. The next set of question, I would want view from each of you on the same question. One of the question that I'm increasingly picking up these days, given the market scenario and challenging economics for new projects, is should India be even looking to produce domestically? And the argument that is given is, hey, why not go to a Middle East where feedstock is cheaper, build those capacities there and bring the product, or, sign free trade agreements and get the products from there. Again, I would like each of you to opine on that. I mean, is that strategically the right direction? Are we missing something? Would be good to know. So maybe, Leon, if you want to get started, and then we'll go in the order.
I believe India is on the right track. India is slated to become the powerhouse in petrochemical production. But a few things have to happen. One, we have to broaden our thought around feedstock. We shouldn't just rely on the traditional feedstocks. We should broaden it, because the import of crude and gas is growing, and there's trade balance issues by just keep growing that without some smart solutions. So we talked, Mr. Shankar mentioned the need for higher efficiency. There's a lot of innovative solutions to have a better use of these imported crudes and hydrocarbons. But after the importation, we make advanced materials like polyethylene and other polymer products and other advanced materials. It's crucial to keep those hydrocarbons in circulation. To say it very bluntly, we make plastics and then we dispose of it. Plastic is too valuable to throw away. These are high-value hydrocarbons that in smart ways can be kept in circulation. So if we figure out how to keep the hydrocarbons in circulation, we can help satisfy the thirst for more consumer products and industrial products without a proportional increase of import. We also have other opportunities to take biomass and other feedstocks alongside with the traditional feedstocks. So that is number one that I think must happen. Number two, we need to consider India as a potential export hub for petrochemicals, because that shifts the mindset to a larger opportunity. And I think with the domestic demand and the relatively efficient capital deployment in India, you can outcompete the places where, yes, feedstock may be inexpensive, but the capital deployment efficiency is much worse. So I think that is a second advantage that India has. And third, with the vast available existing infrastructure, you can capitalize on that by having much more integration and, again, better use of your feedstocks to maximize the high-value products and minimize the production of less valuable products. And you know that Lummus has the crude-to-chemicals, which is one beautiful solution. But there's many more solutions to achieve this. And like I mentioned in my opening statement, we need to find an integration of digital and process and catalyst and equipment solutions to get to smarter outcomes. And then the last point that I think is crucial is we have to have the right policies and government mandates to keep expanding in these various directions so that we can make sure that India is on this track of becoming this global powerhouse also for export. This is my vision.
Thank you, Leon. Mr. Shankar, same question to you. Should we be making here, or should we just buy from outside or go build outside?
No, this, from my point of view, I say this is a very important decision whether to make or buy. This is the kind of decision that everybody takes in our industry on a day-to-day basis also. And we have looked at this option of make or buy, and then I'll give you one very beautiful example about how this CPCL's ecosystem runs. We are a 60-year-old refinery and a standalone refinery. And at the same time, if you look at our petrochemical intensity index, which is very important from profitability point of view, you would say, but we have never believed that the entire range of products will come out from the refinery. Around 80s, 90s ecosystem developed in the Chennai, Manali area, our refinery area, where we acted as a mother industry for various petrochemical downstream refiners, the petrochemical plants which came up there. So a beautiful ecosystem has been developed in this region, and we give the petrochemical feedstocks to them, and after the value is realized at their end, the return streams come back to us. So that kind of a collaborative way of working is taking place in Manali area. And needless to say, we believe very firmly that you have to develop a proper ecosystem there wherein the maximum value can be achieved by collaboration and by working together, whatever is good for the nation that comes out from that area. So when even the government of India is working towards making many petrochemical parks where there is a proper integration of the feedstock, there is a ready consumer available across the street. So these kind of benefits you will get only when you bring in the feedstock and do a value addition at our end. So what I personally feel is that taking this very successful model of how CPCL operates in its region, I have a very strong feeling that we should definitely bring the feedstock and then do proper value addition at each level. And then subsequently at the downstream level also value addition occurs. And in that scenario, what happens is there is a very strong bonding that takes place, that the streams get properly valorized. That is the most important part that comes out of it. So I have a strong feeling that this is a very successful model, and we have demonstrated it and running like this for last 60 years. And with this model in place, we can only replicate it in a larger size. and also look at ready consumers available for you. For example, if we are building a, say, PDH plant we are making, then there are people in our Mandali area who can definitely be a part of the entire project. So we are looking at some joint venture kind of an arrangement where the feedstock and the products keep exchanging across the street and through pipeline network. So that gives a maximum value to the system, and the capex also can be shared equally, and there is a lot of potential available to improve the entire region by going on a manufacturing process instead of buying and importing the whole substance. Because it also adds to reliability. Otherwise, your feedstock reliability also is broken. You don't have any proper control on the market. The capex also, you are funding somebody else's capex to bring the products in. So it's an ultimately, if you look at a win-win situation, the best thing is to produce at our plant so that the entire environment also grows along with it.
Thank you, Mr. Shankar. Mr. Bartan, your thoughts on this?
See, we moved from make for India to make for the world several years, at least quite a few years back. The stated policy of government is stop import, self-sufficiency, and Atmanirbhar and whatever Viksit Bharat dreams we are having. To achieve that, there is no second question that we should not do. We should do here only. Mr. Shankar has put it very nicely that how the ecosystem has grown around Manali when they came and started introducing some of the petrochemical feedstock when they gave. At least 4 to 5 industries are today thriving there, which is actually helping India in several ways. 2 ways we'll have to see this. One is as a government company, definitely we'll follow the stated policies of the government. If you just look at Barmer, it was a deserted desert few years back. Today is no more. If you just come to that place, see the district, the economic activity, even before our production started, is very, very huge. The entire the sleepy village has become a very prosperous town, and in the coming days, it's only going to grow. For that to happen, we will have to make in India. Now, there is a question is there. What if somebody does at a very cheap price and then comes and dumps here? Then why are we following this torturous route? That's true. The question is true. This is where technocrats, business, entrepreneurs, all have to come and then provide a solution to this. Mr. Leon has very nicely put it. Look at recycling. Look at distressed feedstock. See that your cost of production, cost of feedstock comes down and survive and produce in this highly competitive market. We'll have to look at that. We'll have to look at, going back to my initial opening remarks, again, standard feedstock and technology to achieve this. So the onus is on us, and we'll have to do that.
Thank you, Mr. Bartan. You made a very important point. I mean, the stated policy is not just Atmanirbhar, but also look at exports. Realistically, where can India really build the leadership beyond commodity petrochemicals? And maybe, if I can again, Leon, start with you.
So, several areas. So besides the petrochemical basin, that is, in my opinion, an opportunity for export, as I mentioned earlier. There's 3 key areas where I think there's a growing potential in India. Number 1 is crude-to-chemicals. The crude import is obviously very significant in India, and the infrastructure is there. But the growth of petrochemicals in the long run will outpace crude consumption for production of refined fuels in the long run. And I know there's a current market tensions, but when you have a vision for 2040 and beyond, you have to think of the long term. And this is where crude-to-chemicals can be a highly efficient conversion of crude to petrochemicals, maximum yield, or also co-produce some diesel and or gasoline as you desire. This has shown in Korea to be a highly efficient path, and with the domestic consumption growth in India, I think the right recipe is, economic recipe is in the long run for crude-to-chemicals here. Second is ethanol. India is one of the top 3 countries in the world in production of ethanol, together with Brazil and the United States. Ethanol, of course, is highly added into gasoline, and in India, I believe it's now close to 20%, if I'm not mistaken.
That's right.
Which is great, but I think much more can be done with ethanol. Ethanol can be a petrochemical building block to make any molecule. You can convert ethanol profitably to ethylene, and then from ethylene you can make any molecule. So we have a technology to convert ethanol in a few steps into SAF, sustainable aviation fuel. For example, we have a technology to convert ethanol in a few steps to polypropylene and polyethylene. So this is a fantastic opportunity for India, which does not depend on imports. And it can create an opportunity for export because the world is looking for more sustainable aviation fuel and green polymers. So I think this is a great opportunity in India, and Lummus is actively pushing for this ethanol to SAF technology in India. And then third is waste conversion into value. I know waste is not sexy to talk about, but when you think about the opportunity you have to convert waste into valuable products, you address three things. One, the circularity of keeping hydrocarbons in the industry instead of disposing of it, reducing import reliance in relative terms. Second, you actually solve a big problem of waste that is not used anyway. And third, you make valuable products in a sustainable manner. So let me give you two examples of what we have been working on and where I think India can profit and benefit. We have a technology in partnership with Innovent to take waste tires. Globally, there's more than 1 billion tires wasted each year. I'm sure in India it's a large number of tires. I didn't track, but I'm sure it's in the hundreds of millions. So if we can convert those waste tires to carbon black, to steel, to pyrolysis oils, which can be fed back into the petrochemical sites, you have a clear case, and we can. That's our technology. And second example I want to give is to convert waste plastic into valuable products. There's so much plastics produced, and again, if we can recirculate the hydrocarbons in smart ways, we can achieve the three objectives I just stated. And again, we have technologies in small scale or larger scale that can be either distributed in small communities where you don't need long-distance logistics. You can actually locally collect the waste plastic, convert it into valuable hydrocarbons, and consume those hydrocarbons again locally. So beautiful examples of what I think are opportunities in India. Crude-to-chemicals, where Lummus is the #1 technology developer in the world. Ethanol-based production of sustainable aviation fuel or polymers. And third, conversion of waste like rubber tires and plastics into high-value products.
Thank you, Leon. Going to you, Mr. Shankar, again, which places, which areas where we think we can build, not just for India, but for the world?
Yeah. There is a good report of Niti Aayog, I think 2023 report. It highlights two important things. One is that it says that by 2020, 30 or 32, the specialty chemicals we should be the net exporter. That is what it predicts. So figures show that the specialty chemicals we should be the net exporter by 2030, 32. That is the range. And coming to the petrochemicals, there is still a gap that is there. There is almost more than 50-60% of the gap that needs to be bridged. So I feel that if we are able to make a good impact on the specialty chemicals to continue this journey, that would be one area where we could be a net exporter in reality. That is one area. Secondly, the petrochemicals offers a very huge opportunity for the entire nation to build some, this is the right time to actually invest. If you see the downtrend that is continuing, it is only a matter of time before the petrochemicals, the pricing also improves and the profitability also comes in. So as the saying goes, like it is better to invest at this time, and so that by the time you are seeing the peak, you are up and running with the new projects. So that is where the real investments are required, and with a good support from the government in these areas, because the capex is quite large. We are looking at almost a 10 billion kind of a project to begin with when we talk about petrochemicals. So We need really huge capex to come in, and we need to have a good support over a long period of time from the government to keep this project running. Because whenever we do such big projects, multi-crore projects, when we do in our area, there is a huge multiplier effect which comes around the entire region. So that also adds a lot of, like what Mr. Bardhan was saying. Barmer is a good example. If you look at all the Indian oil refineries, if you look at our own Manali refinery, when we started 60 years back, where was it? And today we are a part of the city, proper city itself. So that's the kind of impact it makes on the entire society. So when we look at petrochemical, it is good time to really invest in a petrochemical and start building capacities to bridge the gap between the import and export. And then the specialty chemicals, we need to identify the core areas where we can really contribute and really make that Niti Aayog report as a reality, move into the totally net exporter region.
Thank you, Mr. Mr. Bhartan, your thoughts on this?
Yeah, same. I'll repeat crude to chemicals. We are doing a demo plant in our Vizag refinery for a single-step conversion of crude into olefins and aromatics in a different platform. There is also an alternate technology to the conventional steam naphtha cracker, which will again utilize a different technological platform to get a similar yield, which will be at much lower operating expenditure. If such things exceed, I mean, if they succeed and we can scale up, definitely India can lead in this petrochemical production, what we are talking about. So technology is definitely one. We should look at different ways, innovative ways of bringing the difference in increasing the production at the same time at the lower OPEX. Think big. Scale has to be big. If you are still going to look at small scale, you will not be able to beat the competition. So second is the scale, technology, then the scale. Feedstock we have discussed enough. With this, we must be able to compete and keep growing. And the other one I already mentioned about don't stick to simple commodity polymers, but let us do some value addition to that.
Thank you, Mr. Bhartan. We talked a lot about opportunity for India. Again, one question where I would like opinion from all of you. What's the biggest execution risk you have seen or you see in scaling India's petrochemical sector? Leon, start with you.
So any major investment has execution risks, and India is no different from any other place. But I think the opportunities outweigh the risks if well planned. And I know Mr. Bharathan has led a major project and quite successfully. And so I think the way to mitigate the risks, as he has mentored me, I would say, or taught me, is to make sure you leave no stone unturned to look at what could go wrong. And I think Mr. Bharathan actually invented the term, the what could go wrong approach in safety and operability reviews. And if you leave no stone unturned, you ask the right questions and the tough questions with an open mind, you mitigate the risks of these large investments that are directly linked to the implementation and execution of those projects. And the second side is around any project, the infrastructure and the policy. I think the strong partnership between government and public sector companies permits to manage those risks in a very prudent manner. So I'm very optimistic in the capability of India to manage these large projects, and that has been demonstrated by Mr. Shankar and Mr. Bharathan.
Thank you. Mr. Shankar, execution risk?
More than the execution risk, I think the timing of the decision is most important. When are we going to take this decision? That is the most valuable thing that we should come out with, because the more we delay on these kind of investments, it is only going to increase the cost of production, the cost of execution of the project. So the timing should be right. That is where I would like to give focus on. The decision should be quick. You need to take it forward with a good support from the government and also from the industry players, where you have a good tie-up of the feedstock coming in and then the product getting distributed. So you end up in a good collaboration manner with the distributors of your products, take it up as a good end-to-end solution 2-year project and then time it right. That is where the biggest challenge comes in. I say that's it.
Thank you. Mr. Burton.
Yeah, we have two major problems. One is we don't have large contractors who can execute in a very efficient way. We have shortage of skilled labor. These two are the shortage which is actually hitting the construction. The moment the time goes more, your cost of project also goes up. These two will have to be addressed. For this, we definitely look at different stakeholders, government, our own companies, and so on and so forth. If this is done, then whatever we have been talking in the last 20-25 minutes will be made possible. These are the two things we'll have to address.
Thank you, Mr. Burton. My last question for the day, and maybe 1-2-liner answers. What is one decision from a refiner's or policymaker's point of view that we must get right in next 12 to 24 months to sustain this momentum?
Have the right long-term plan for a long-term vision and not being held back by the current state of economy, but have the long vision and act fast and with precision. Use AI as your starting point and capitalize on AI to have a digitally native approach to your future.
Thank you. Mr. Shankar.
The right thing that has to happen is see what the market requires rather than seeing your own capability. Like I said in the beginning, what the ecosystem really wants, what they want to really what they want for the growth of the region. We have to look at the products which are most beneficial for the, rather than going on a commodity zone, look at specialty areas, take the right decision, invest at the right time, and then move forward. That is key word from my side.
Thank you. Mr. Burton.
So for us, immediate is to stabilize the assets what you have built. We'll have to start producing and create value for us. That is obviously the priority number one. But notwithstanding that, we also have our own plans for the future. We'll have to at least have the blueprint ready. So the moment we are able to invest more, we will also do that at the appropriate time and taking the right decision at the right time.
Thank you. With that, I'd like to conclude this session. Thank you, my fellow panelists, for patiently answering the question, and thank you for the audience to stay for the last session
Thank you all.
of the day. Thank you.